Okay. Good day, traders. Jay here from MarketWise. So I just want to share some certain stuff which I have learned, and I think will be very useful to every trader, especially retail traders, right? So, like I said, before I ever placed a single trade or anything, I have a friend who is a professional trader, Pretoria, and he spoke to me about a lot of things at the time. He met with me before I even knew much about anything about trading, and he spoke to me about a couple of things which only began to make sense when I began trading. You know, leverage, margin, stop losses, all that. But basically, I'm going to break it down because I've realized, especially after mentoring some guys, and I've seen where people make it and where they fail. And having been close to like professional traders who trade with quite a lot of money, then I've learned like by their rules to try and apply them to myself and give advice to others. Okay, so learning to trade like a professional trader, like a pro trader. Okay, so I think maybe I'll do 3 or 4 vids just to get this out there. But there's some points which I think as we go through them here today, you'll see where you've been failing and where you can improve. Okay, so I want to put here the typical retail trader. Don't get bored now. It may seem like as if this is just going to be a whole lot of talking and no charts. I do get into charts if you just check on my YouTube channel, and I do get into strategies and all that. But realize this is very important. What I'm going to share with you, your psychology, your mentality to trading. That's why I'm saying maybe 3 or 4 vids might be sufficient just to give you that edge. Okay, so typical retail traders versus typical professional trader. I'm sure as I go through this, you're going to see how a lot of stuff makes sense. Okay, so the first thing is like typical retail traders. I've noticed this with students and that is they always go for this boom bust sort of approach on a trade. What do I mean by boom bust? Is that instead of looking at a trade, instead of looking at their trading over a series of trades, you find a guy will get a certain amount of capital, risk it all on maybe 2 or 3 trades, and then he gets emotional when he loses. If he wins, he's so over the moon. So this is one thing which I've noticed is this boom bust mentality, where it's like maybe they'll focus on 4 trades, and the result of those 4 trades, or maybe even 1 trade, and then from there they'll be happy or sad, something like that, based on what takes place there. But whereas when we look at a typical professional trader, let's have a look at the situation and what happens with them, is they do not focus on this boom bust sort of approach, but they look at steady increase. Okay, steady increase. So one thing which we all know which can affect typical retail traders here is the capital. Maybe they don't have the sufficient capital, so this is why they'll say I'm going with the boom bust approach. But trust me, that boom bust approach, it develops. It's something which develops as a habit, and you don't want that as a bad habit. Okay, you don't want that boom bust. You don't want this. You rather have a steady increase, even if your capital is small. Do not risk. Have your rules. Do not risk so much of your capital. I say, even if you got small capital, I'd say the highest you can risk. I'm not saying this is what professional traders do. They risk even just 2%, but I'm saying if you have small capital as a retail trader, don't risk more than even 7%, even if you have a little bit of capital, but allow your account to grow, allow yourself to be charged over a series of trades, not boom bust. Okay, boom bust. These are guys who 1 month they're up, the next month they're down because they hit it, they get a good trade. Okay, so another thing which I've realized with retail traders, which is so big these days because of Instagram, because of all the groups and all that, the Telegram channels and all this kind of thing, is that they are emotional. And when I mean emotional, things which prove the emotions is they compete, boast. What else can we say? They compete, they boast amongst each other, they compete to say they were right. They fight, they want sniper entries. What else can we say about typical retail traders? This is what I've noticed myself. They boast, they want to be right. They want to be right. Okay, maybe just put that under. They want to be right. They want to be right, and they don't want the market to ever beat them. So they fight the market. If he's bullish, he will never change to be bearish because what he saw is a bullish thing, and he will never change. That is what we see with typical retail traders. Okay, and versus what we say for the typical professional trader, he stays in his lane. That's how I think I'd love to put it. Stays in his lane. Okay, he is not compared about competing, because if you see with the retail traders, someone is competing to get that picture to post a sniper entry. He wants to post on the group that he said that maybe GU is gonna buy, and he's gonna just keep on punching that buy entry, or just keep on trying to make the trade work just so that he can post on the group and say he was right for whatever reason according to his strategy, that he was getting a buy. And they compete to show profits, showing profits and all that kind of thing. That's being emotional. A typical professional trader is not going to be competing with anyone. He's not concerned about sniper entries, although it's good to get sniper entries. And they do not fight to be right. Okay, so with these guys, what happens? These want to be right. These realize they don't need to be right to make money. They don't need to be right. They don't fight the market. They just simply follow the market. Okay, they follow the market. They have a willingness to change their mind. So this is a big one, this emotional thing of retail traders, because that if you find yourself still to be posting, hey, I got so many pips and that, there's nothing wrong with being happy, but a professional trader, he has got zero emotions. He stays in his lane. He's not compared what someone else is saying or whatever. He is not compared about what someone else is saying. He stays in his lane and he has got no emotions. No emotions. Doesn't get happy when he wins. He doesn't get sad when he loses. No emotions. And that's something which can only be developed. It cannot just happen overnight. But I'm showing you the simple things. If you can find yourself, you stop competing on all these groups and that kind of thing. Sorry, if you stop competing on all these groups and trying to get the sniper entry and that kind of thing, you'll find your emotions will reduce. Okay, and because you're not competing with anyone. Your capital is your capital. Your trading is your trading. You don't need to compete with someone who said this pay is going to sell and you say it's going to buy. And now you just go at it to prove the other person wrong. Stay in your lane. Don't be concerned about someone else's trading. Analyze for yourself and go with it. And that's another factor which I'm going to put here. Typical retail traders, they have a lot of noise and other opinions in their analysis. A lot of noise and other opinions. What do I mean? Okay, now the market does not respect anyone and the market is always right. Okay, so the market does not respect anyone's opinion and the market is always right. So for example, like myself, I do have mentors, and even when I was still first beginning out, whatever my mentor would say, I would take it as gold. Regardless of what I would have analyzed, I would just go and throw the position. This is a signal given by my mentor, or my mentor said this pair is going to sell, or these pairs are going to buy, and I just go for it. And I realized most of the time, sadly, that's what happened, or maybe I can say thankfully, it was a lesson, is that I would have analyzed maybe something totally different, and then speak with the, and then the mentor says something else, and I immediately remove my position. Okay, so what I'm saying is that what do professional traders do? They analyze for themselves and trade with their plan and expectations. Okay, so what you've analyzed, be confident in yourself. This is why myself, I do not like to issue signals. I do not like to issue signals because that creates dependence, and we want people to be independent. So just trust yourself, and don't be too concerned about everybody else's opinion, because everyone will always have their own opinion. I'm not saying that you should not discuss all that kind of thing. It's fine to do that. But most importantly, stay away from the noise. If you're going to listen to what everybody else has to say, and then when you're right, it's going to come back and hit your emotions, because now you're going to be like, oh, I said this is going to happen, and everybody else said this other thing is going to happen. I took their opinion, and now my thing is blown. So be confident in what you analyze according to your strategy. Be confident in what you expect, what you analyze. Stay in your lane. Whatever you have planned a day ahead, that's something else. We'll get into more detail about this plan and all this in the next vids. So just be confident with what you have analyzed, with what you expect according to your strategy. Now, one thing I must make here is that all strategies work. If you did not know, all strategies work, because many retail traders, and that's the next point as well, retail traders, they focus on winning strategies. Where am I? Okay, sorry, let's go here, point number 4. They focus on winning strategies. Now, if you find out, I remember the first time, as I'm saying, when I had my professional trader friend, the book which he gave me, was on Emotion-Free Trading by Larry Levine. And when I was telling my other guys who've been trading longer, they laughed me to scorn when I said, this is the book I'm reading. And they said, we want strategies. Now, all strategies work, okay? So all you need to do is test your strategy. I've got a video on backtesting using the strategy test on MetaTrader 4. Just check it on the YouTube playlist there if you don't know how to do that. So whatever strategy you use, whether you use market maker method, whether you use ICT, whether you use chart patterns, whether you use trend lines, whether you use support and resistance, but have your strategy which you're going to work and test it on the pairs you want to trade, because pairs move in different ways. So test your strategy. That should be back test, sorry, because this is what these pros do. Back test your strategy, and then you should have you get your rules of entry and exit, okay, and use them. If they worked in back testing, the probability of them working in the future is higher. So focus on that. Don't focus on trying out several different strategies. I remember there's one guy who was just using a coin toss at support and resistance, and he was growing accounts. just to say, I don't say it's a good strategy, but if the coin would be a head at support, he'd buy. If it'd be a tail at support, he'd sell. There's something like that. And he was actually growing accounts with that strategy, just to prove to you that all strategies work. So all strategies work as long as you can backtest your strategy. Okay. Point number 5. There is something else which happens with retail traders. They have a tendency to freeze when a trade is running. It's like when they're in a loss, they do not know how to close that loss because they didn't expect the trade to go that far. And then all of a sudden, they just see this thing running and they watch their account just go and go, and they keep expecting the trade to reverse, and it doesn't until it closes the account. So this is usually from over leveraging the account. Some crazy leverage some brokers offer, and they never expect that to happen. Whereas when we talk of professional traders, they accept and calculate, or rather, can we say they calculate and accept the risk in advance. So they don't move their stops. That's a mentality. That's something which you have to train yourself to do. So basically, this is what I see and what I've experienced thus far with typical retail traders and typical professional traders. These are the things. The boom bust thing, these guys normally not more than like 1 to 2% of the account, but as you know, maybe retail traders, they have less capital. So I say, even 5 to 7, even if you have small capital, grow it. Rather steadily grow your account than try and just smash it. Develop that mentality and that habit. We are creatures of habit, so if you keep doing something over and over again, you will eventually do that thing repetitively. Stop competing, posting, wanting to be right and fight the market. Stay in your lane like a typical pro trader. Don't compete with others. If they are winning, happy for them. Because one thing I should tell you, a lot of people, when they lose, they don't tell you they've lost. When they win, they will post and tell you how they said this is going to happen and that's going to happen. So just stay away from that. Just try and stay focused in your lane, your risk to your reward. Use your strategy, okay? And that comes as point number 3. Stay away from the noise. Everyone will have an opinion. Even if he's a professional, they can be wrong. I've got guys who I know who are making millions, and at times they say something and I think something else, and they are wrong and I was right. So before I would exit my positions based on their opinions, now I just stick to my pre-planned rules for entry and exit. And if I'm wrong, I'm wrong. I say, well done, you are right. Or if not, it's not about competition. I don't need to know what's going to happen in the market. I just need to follow the market. Okay, so don't stop looking for a winning strategy. Okay, the main thing is about your mentality and your ability to control yourself. Strategies will always be there. There's no 100% winning strategy. If it was, everybody would be using it. So it's a game of probabilities. It's not about the best strategy. But whatever strategy you have, backtest your strategy, get your clear rules for entry and exit. If you don't have strategies, just go to my website, marketwisetraders.com/tools. I've got a couple of books there with some strategies. Once you sign up, I'll give you access and you can read them for free. And you can use those strategies to help you. Okay, don't over leverage. There's no boom bust here, because even if you get your big break, as I've seen in the past with some friends, some traders that I know, they make amazing money and they just lose it all in one trade, because that mentality of boom bust will always be there. You rather have a steady increase like a professional trader. Calculate and accept your risk. That is the same with capital risk. So now this just, I think I can squeeze this in. Okay, and some few other points which I think I can squeeze in. typical things which are always said and which is not as straightforward as it seems. You've often heard people say, teachers or whatever you say, they say, let your winners run, right? Let your winners run and cut your losses. That sounds so simple, and it is not that simple. That is just easier said than done, if you ask me, because you don't know if it's going to be a winner and you don't know how long you should hold it for. You don't know if it's going to be a loss and when you should cut the loss. Okay, so what I can say about this is let's just have a look at what, let me just get through my notes here. Let's have a look at what professional traders do and what you should do when we speak of this let your winners run and cut your losses, because this is just so cliche. And I think there's something more important if we look at this. If I say follow the pros, follow a pro trader's way of maybe this statement, which is just so bleak. We'll follow their way. Okay. So what is it that pro traders do that we should do, which will let your winners run and cut your losses? Okay. Okay, so before you enter a trade, define your risk. Define your risk, which you'll be happy if your stop gets hit, you will not cry. Okay, so that is a way of cutting your losses. Okay, not just to jump in because you see something, already know beforehand, if it reaches this point, my setup is violated, I'm exiting. Okay, right? So you got to define your risk. You got to define your risk and be ready to exit at that point in time. Okay, so, and another thing is follow a pro trader, don't hesitate. At times, why will you hesitate? Because of past experience, the fear of a loss. So don't hesitate when the setup appears. When the setup appears, take it. Regardless of what happened in the past, if that's your strategy rules, take it. Of past losses. Because losses can hurt you where you don't enter because you're afraid you're going to lose because you had maybe 4 losses in a row. It's a game of probabilities. So not every time will your strategy work, but you know that it's a strategy. That's why it's going to work sometimes. Sometimes it won't work. Okay, so don't hesitate when the entry comes, take it. Okay, clear signal, don't hesitate, because what happens is you'll get in late. You'll get in late, and when you get in late, your stop is too big. Okay, so enter at your setup entry. Okay, don't get in too late. Professional traders, once the setup appears, they get in, they don't hesitate. Okay, what else can we say? Don't get in too early. Don't get in early. This is very common. Very common. Because you'll be saying, like market maker, you'll be saying, oh, it's the first leg. I know I'm expecting a second leg. No. What has not yet happened, you don't know if it has happened. The signal hasn't developed. Don't take it. There's no second leg. Market maker, double, what do you call it? Price action guys, double top. If it doesn't break the neck, signal hasn't developed. Don't take it. It hasn't broke out and retested. The signal hasn't developed yet. You can't say, I expected this to happen when it happened. Hasn't happened. The signal hasn't developed. Don't enter. Seems simple. Stick to these rules. Be rigid like a robot. We'll talk more about this in the next lesson. But if it does not give you the signal, don't enter. Okay, this is what pro traders do. Okay, and then another thing, when we speak of let your winners run, is don't exit too early. How do you know not to exit too early? At times, the emotions, just a pullback. Remember, like the market, if you don't have money on the line, you can watch green bars and red bars the whole day and nothing will happen to you. But when you've got money on the line, you find the closer that the price comes back to your entry point, you'll be afraid to say you've lost profits and all that. Don't take your profits too early. The market doesn't just go in a straight line. So be patient. Don't exit too early. If you're looking for a take profit level, don't be emotional. The market has to allow the market to do what it needs to do. Allow the market to move. That's why you accepted the risk at the beginning. And so just be patient for it to reach your take profit level. Okay, so don't exit too early. Another point, which in as much as I've said don't exit too early, allow the market to move to your TP, to your direction, or TP. Don't just exit so early. Another point, in as much as I've said that, is that never let a winner become a loser, isn't it? Don't let a winner become a loser. So what can I say here is if you see that your profits, let's say your profits are greater than your stop loss when you started, your stop loss, then lock your profits. Lock, take some profits. Okay, lock or take some profits. Because you don't want lock, move to break even. You should have your rules on what to do, but I would say it's always good to take some profits because you're not guaranteed that winner will remain a winner. So it's all about your analysis. This point number 4 and 5, you have to have your rules to say if I'm up by 30 pips, I move to break even, or if your profit is now 10 pips more than your stop loss, lock your profits. Have something. So you need to be so you can have that gradual growth, isn't it? You have that gradual growth. Sorry, yeah. And if I just say, yeah, let's see, point number 6. What did I have here? Okay, this comes back to the same point of saying don't fight the market. Okay, when I say don't fight the market, is don't move your stop loss or your TP emotionally. It's more the stop loss. Like for instance, if the market moves against you and then comes back to your entry, then you exit. So if the market goes against you, nearly stops you out, nearly stop loss, then you exit at entry. That's not a good thing. So that's just a typical example. Don't do that. Okay, so allow the market to move. It's the same like don't exit too early. Just allow the market to do what it has to do. This is why you have your stop loss point, you have your entry point, isn't it? You have your stop loss point and you have your entry point. I mean your take profit point. You've predefined that before you entered. So if you've done that, do not become emotional to show the market and say, yes, you thought you were going to take my money, I'm getting out of there. Okay, but of course, if it violates your entry rule in a certain way, you can exit. But all I'm saying is allow what your strategy says is going to work for you. Allow your strategy to play out. Don't exit too soon. Okay, don't exit too soon. So you have to develop this kind of thing. And what I can say with a pro trader is they've developed a mentality to think in probabilities. What does this mean? It means that they are focused on a series of trades, trade results, not the current one. Okay, so when you focus on the current trade, you'll be like, if you lose, you think that that's the end of the world for you. But with the professional trader, they do not focus just on the current. They do not focus just on one trade, but they are focused on a number of trades, saying over the next 15 to 20. And that's what I often say is judge yourself over 15 to 20 trades. Okay, so that's where your risk now, your capital risk, point number one, your boom bust, which is not the way to trade, but your steady increase of capital. Make sure your capital can account for 15 to 20 trades, your stops, okay? So that is to judge yourself over a series of trades and be mechanical. We'll speak about this in the next bit that I'll do. So basically, this is what I've realized and what I've learned even from the guys who have managed to learn from. Okay, so define your risk. Don't hesitate. If the setup appears, trade without fear. Right? Don't hesitate. Don't get in too late, because if the setup appeared but you get in late, you cannot be saying, oh, well, there's a setup, but you got in too late. Enter exactly when the setup appears. Okay, don't enter too early when the signal has not even developed for your strategy. Okay, this is how you will execute your trades. This is how you will let your winners run and cut your losses. Don't exit too early. Allow the market to move in your direction. The market doesn't just move straight away. You got to be patient. Okay. Don't let your winner become a loser. Okay. Have your kind of rules. If you get into a certain level of profit, you can move to your entry, right? Of course, this I share with my guys. You can lock your profits at a certain point. Take some profits. Okay. Don't move your stop loss or TP just to fight the market. Just allow the market to move. Okay. And then most importantly is do not judge yourself based on 3 or 4 trades. Only have the mentality of a market trading professional. Judge yourself over a series of trades, not just over 2 or 3 trades. Okay, so I'm pretty sure this has helped you. Listen to this again and again and practice this in your trading. And I'm pretty positive that you'll see great change in your trading. Just stay in your lane, follow what you know and what you have back tested and seen that works. Just be patient, allow your account to grow, and everything will work and it will be fine. Okay, so happy trading, guys, and thanks for watching.
Learn, then earn money online. You control your money. You control the risk and the reward. Start from as little as $10. Stop losing to get-rich-quick scams and pyramid schemes. Learn a legitimate skill of online trading. Already a trader? Stop donating to brokers. Become independent. Stop relying on signals and careless account managers. Learn to trade the market maker way. Take our course and follow the rules of big banks and smart money. Get wisdom. Get understanding. Get wealth. Contact MarketWise Traders today